welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero.
Alrighty, welcome back to the Asset Revolution podcast. Today is a pretty special episode. You're going to be listening to this in the first week of the new year, but we are recording this kind of at the end of the holiday season. But today I have a very special guest and an announcement as a partnership, which is kind of the genesis of this episode, which is kind of a bonus. We had our regularly scheduled release a couple days ago, but now you're getting this bonus content. So let's get right into it. Introducing my guest today, I have Doug Schwenk here from Digital Asset Research. Doug, welcome to the show.
Thanks, Mark. Thanks for having me.
Yeah, hey man, happy to have you. And let's kick this off by telling a little bit about yourself to the audience.
Well, I professionally grew up largely in Wall Street jobs, worked in hedge funds for a number of years and in technology, and have in the last 6 or so years been professionally in crypto, which sort of scratches an itch I have as a guy who studied math and physics in college and has always been fascinated by cryptography and sort of the intersection of cryptography and financial markets. It's been a very interesting place to be.
Wow. Okay. So I'm sure we can spend 2 hours talking about kind of that intersection and what you've learned and everything. But so how did that get you? Is that how you then got to forming this firm, Digital Asset Research? How did we get there?
Well, in 2016 or so, a lot of the folks in our networks, the team that founded the company, were interested in investing in crypto. And we think about our networks, they're typically institutional investors who saw a lot of benefit adding Bitcoin to a portfolio, adding Ethereum to a portfolio. And at that time, a huge boom in the ICO craze of new assets that were a lot of times very interesting use cases or high potential and offered a real diversification. But the market was very retail focused and very retail driven. Mm-hmm. And so you couldn't just go get institutional quality services. A lot of the exchanges, the custodians, the other service providers were just not catering to institutional clients, and a huge number of kind of regulatory issues pop up in that same analysis. You think about, well, I need a qualified custodian. I need to understand who can be the administrator for my fund. All those kinds of questions were largely unanswered. And so the founding team really looked at, how can we help institutional clients navigate this space, and a diverse background in that team, and really looking initially at, how can we produce some research that might evaluate the assets, help you understand how to think about valuation and the underlying technology and all the token economics and all the other aspects of these assets that make them a challenge for a traditional investor to wrap their heads around initially. And then how do you also think about things like custody and administration and the other services that you need to have. And a lot of the early clients of DAR were venture fund managers who were looking at these as early stage venture investments, and a lot of those clients have gone on to have great success with the investments they were making. One of the things that sort of became clear to us early on was that market data was a huge problem in the space as well. And so we kind of got into a research and market data niche focused on institutional investors. All of those, like at that time, you could probably have started 57 different companies to handle all of the different problems that institutional clients have or had. But those are the two kind of areas we've evolved into over these years.
Wonderful. So digital asset research, market data, and research. It sounds like it actually made sense a lot when we were going through this, kind of courting of each other when we were, researching ourselves. But then, for us at Arbor Digital, we knew that there needed to be more levels than just us. We have a team, there's 3 of us that conduct, and we kind of divide the responsibilities of that research. But we know that having, diverse resources when it comes to market data and research, because the industry is still so fragmented. So even back then in 2016, 17, there's still so much fragmentation in those sections where there's a need still. And, it's given where you all started, especially as, your clients were those venture capital funds, we certainly take that approach too with managing a few of our portfolios. That's how we see a lot of these investments. So there's a synergy there that made a lot of sense. And then for us having the diversity in terms of research, thoughts and minds on the tokens and the analysis, it made this kind of partnership really a no-brainer for us. And we're happy to have you guys. So I hope if you're listening today, what we're going to do today is really help you make tangible kind of, what these things are, what is market data and research within the digital asset ecosystem, Bitcoin, Ethereum, and beyond, right? Because there is much more than just those 2 assets. But Doug, real quick, before we go into your specific role over at Digital Asset Research, tell us a bit about you as a human. Where are you based out of? What do you do?
I am in New York City at the moment. And what do I do? Well, there's a lot of things to do in New York City. So we'll try to get out and enjoy as much of those activities pre-COVID a lot easier. And we've had our challenges in the last couple of weeks here with some Omicron spike. But other than that, get out to dinner, go to see shows, go to see live music, all those sorts of things. And love to get out of the city just as much. And so getting upstate, going out west, seeing the countryside is a great pastime, and really love to travel. So usually spend a lot of time in Europe and other destinations. Maybe not as much in the last 2 years as I used to, but really do enjoy those kinds of mind expanding, culture expanding adventures.
That's wonderful. So you say mind expanding and culture expanding. That definitely is a lot of crypto, right? Like definitely have to expand the mind. So let's use that as a segue in. So tell us more about kind of the process then. So you mentioned market data and research. So tell us how digital asset research approaches those 2 segments. And let's start with market data.
Yeah, so we think about ourselves as having clean market data that has been stripped of some of the noise. So how can you get signal out of the noise? Lots of crypto data available, and you can get overwhelmed with the amount of data. Mm-hmm. And then when you look at that data, it's often being produced by people who are not the normal market data producers. Like normally you'd go to the New York Stock Exchange or to NASDAQ or to some other exchange and say, look, what's the price of IBM or what's the price of Apple? And you'd get a price that's definitive or as close to definitive as you can get. Mm-hmm. But with Bitcoin, there are so many different exchanges out there, and it's not just Bitcoin, but think about all the other crypto assets that you don't know exactly which ones are good or not good, which ones are producing accurate data, which ones are allowing for market manipulation to happen. And so we take an approach of surveilling those markets, looking at all the liquid exchanges, vetting them for quality, and then taking only those exchanges that have the highest quality data coming out of them, which is where we know they're taking steps to prevent market manipulation, where we know they're run by professionals who are capable, where we know they've got good KYC and AML policies, where we know they've got good business continuity plans, all those sorts of factors. And then we calculate what is a verifiable market volume and an accurate market price. And we back that up with events like the equivalent of corporate actions, which are like the hard forks and soft forks and other types of events. We back it up with static data, circulating supply, the consensus mechanism, all those kinds of data points you'd want to know about an asset. And we bundle all that up into a market data feed that is much more accurate than just the sort of typical crypto market data that's kind of taking anything in that that is available and then using data that may be either manipulated or incomplete or in some other ways noisy.
Mhm. Yeah, and one of the biggest things that we pay attention to is obviously market data. For our analysis of the tokens, qualitative, fundamental, all the different segments of analysis that we do. And quality was this huge thing because there's again, like as you mentioned, there's a ton of data. I think one of the new things about blockchain and these types of assets is the sheer amount and different types of data that you can glean because they're so transparent, right? And the struggle right now for professionals like us or anybody who's managing investment portfolios is really now how do you discern that data, right? And so in order to be able to have quality discerning of the data, you need quality data. And so for us, it made sense to where we needed to make sure we had that idea of clean data because there's so many free resources out there with data. There's so many other people spewing out data, right, on YouTube or social media. And it's like, really, how do you know which data is, good data versus bad data versus noise, like you mentioned? So for us, that was one of the huge pieces that DAR brought to the table was this idea of cleanliness and quality for sure. Great. So tell us a little bit more then, like, how do you take this clean data and then, so do you just give data or do you give actionable advice and how do you help clients discern that data? Tell us about that.
Yeah, we do look for insights where we can. Now, it's not advice from an investment perspective, but what we try to help them do is see how the market's evolving and what patterns are happening in the market. We have a quant team that does various analysis and what are safe assets from a number of different perspectives. And so we really look at these assets from can they be safely custodied? Is the code base robust? Do they follow cryptographic principles that are standardized and that we know are safe? Or are they doing something experimental? And what's the regulatory environment for this asset? Is it truly decentralized or is it controlled by a central party? And really kind of a 360-degree view of that asset. And that's something that we have developed over the last 5 years. Been doing it for 5 years, but I would say really has become more and more mature. And as we see this market evolving from a market that was really just Bitcoin for a lot of investors into a more diverse market, a more diverse set of opportunities. And this is one of the things we really liked about Arbor is seeing that there are opportunities beyond just Bitcoin. And I think some of those opportunities are easier for investors to understand from a kind of cash flow or transaction flow or something that, where some fundamental analysis can really come to bear. I think that type of vetting of the asset, the type of data and quantitative insights that we can put in front of investors will help them make choices about what's appropriate and given their risk tolerance and where they want to play in the market.
Yeah, absolutely. So a couple things there that I think really would speak to the audience. What you said, the first is just kind of the depth that you need to go into in order to truly analyze these assets, right? And that's one thing Arbor has learned over time is, as you go deeper down the rabbit hole, and especially analyzing these, it takes a lot of time, takes a lot of effort, right? These are 24/7 markets, 365, but you could research these things to the moon and you're just continuously getting data. And so one thing we now understood is that, hey, we need more than just me or two other people. Like we need more teams. We need more eyes on these things, especially as we go further out, as you mentioned, on the asset spectrum, right? When you go into the top 150, I mean, there's 10,000 tokens now and counting, right? By the end, right? So it's impossible unless you're hiring a team of 20 research analysts. It's very hard. So the depth and breadth of DAR's team and the approach and how many eyes and how much analysis can actually get done within a 24-hour time period really attracted us as well, which I'm sure if you're listening to this and you need more research and analysis, that should be one of the big points for going on board with digital asset research. The second point is, again, going further out on the asset spectrum. You mentioned about, especially in the investment world, we love cash flows, we love dividend discount model. It's what it's how we've built, valuation models, on, traditional investments and how we can, project that and, how we can make investment decisions. A lot of these, unless it's a DeFi, decentralized finance tokens, you can at least have some semblance of traditional, valuation metrics. They're different, obviously, but you can at least maybe make it more tangible a lot easier. But when you go out to these tokens that are layer 1 or layer 2s or other scaling solutions, like how do you value a ZK rollup token, right? Like, or a project, right? Or how do you value or, start to value, something like storage or cloud computing, platforms that are being built, or even just now new with NFTs, it's creating more NFT segments, right? Like there's arts and collectibles. Now there's going to be physical assets, like real estate, or taking traditional stocks and bonds and tokenizing those through NFTs. So there's going to be these different segments. So how the heck do you analyze all that? And that's where, again, if we're looking at who is doing the most work and is not just focused on Bitcoin, but is now diving deeper into the realm of token analysis, that's where you guys came in. So tell us a little bit more, like, was it always the goal to do this entire ecosystem, or was it Bitcoin focused at the beginning? What was the journey like there?
Well, it was very Bitcoin focused in the beginning because Bitcoin had the liquidity and the market cap, and there just weren't a tremendous number of options that had sufficient liquidity. Excuse me. Ethereum was also a pretty strong focus, but it was also a relatively new asset.
Mm-hmm.
It had launched in 2015, and this is just a couple of years later that we really kind of got our start. I will tell you that in the early days, we would have to segment clients from, here are the liquid, can only trade the top 2 to 5 assets because that's all that they can get the sufficient liquidity in, versus maybe the venture clients who were interested in the new thing that's not even trading yet,
Mm-hmm.
and really understanding the use case and the technology and things like that. We've seen a huge shift in our client base in the last 2 years because of the emergence of DeFi and because of the emergence of some of these new asset types that are easier to understand. Kind of our journey along the way has been a little bit of it hasn't always been smooth, because we went through 2017 was just a massive boom, and then there was a crypto winter for a few years, and we spent a lot of that kind of maybe perfecting some processes and getting more robust in our internal capabilities, but there wasn't nearly as much demand as there's been in the recent years. The good thing is during those lean years, we were figuring out ways to vet assets, coming up with metrics to look at. We have a number of partnerships that we built along the way, FTSE Russell, Refinitiv, Bloomberg, Wilshire, where we were able to do a lot of joint work and really understand kind of what do regulators need to see. We spent a lot of time in front of US and European regulators on our own and jointly with some of these partners, and really helped come up with ways to think about organizing the space, looking at it from the lens of more mature liquid investments or early stage, kind of what kind of metrics do you want to put to understand the safety and stability and maturity of a particular asset.
Mm-hmm.
And it's given us, I think, an opportunity to really have a kind of more mature approach to something that's both constantly evolving and is so unique and different to most most institutional investors who really have not seen something new for decades, if even their whole investing career.
Yep.
Truly unique and new types of assets.
Mm-hmm. Yeah, and those partnerships are vastly important. I think one of the pieces of analysis for even just these protocols is about the partnerships they have developed and will continue to develop and looking to develop, right? It's the same thing for, for us, Arbor, or for digital asset research. Any crypto company, or any company with a focus on crypto, I should say, those partnerships are hugely important because it's so early, because the rails are still being built. You need those different perspectives, those different teams, in order to, again, achieve that level of quality that we were talking about earlier. So you kind of sped through them, but tell us a little bit more about those partnerships that y'all have developed.
Yeah, happy to. So FTSE Russell was an early partner of ours. We've had about 4.5 years of working together. Initially, it was a proof of concept. Could we stand up crypto indices, and could those indices be robust, and could we come up with processes that feel good from their governance perspective and to their regulators? And FTSE is part of the London Stock Exchange Group, and so this involves a whole lot of other businesses who were worried about reputational risk and worried about all sorts of other risks. Really started that work with them in 2018, and had a process at that time for vetting assets and exchanges that we were able to get them comfortable with and work jointly to evolve that. And just to give you some sense of what it takes to get a group like that comfortable, we started in 2018, and those indices just launched commercially this summer.
Yep.
So 4 years of hard work getting an institution comfortable with the right approach to crypto markets. And obviously that's a unique case because those are, typical FTSE Russell index is a passive product that needs to have some sufficient liquidity and all the sorts of things you would expect of an index provider. And so we had to tackle a number of those challenges together, and but it's been a great partnership, and we're super excited about where that is going to go in the next couple of years, as many of their clients are looking at launching some sort of index product. Refinitiv is a newer relationship for us, but they were purchased by the London Stock Exchange Group this year. In fact, the deal closed, and so it's become a natural platform for us to provide the joint products we have with FTSE, as well as working on some of our own products on the Refinitiv platform. And it's a very comfortable place for a lot of institutions to go get data. This is kind of, they're probably plugged into 2 different data providers, Refinitiv and Bloomberg, if they're plugged into anybody. And so that's been a great relationship for us recently. Bloomberg's also a new relationship this year. The Bloomberg Index business, for example, is using our data to manage a DeFi index. They use our taxonomy to screen what are DeFi assets, and then use our pricing data to price their index. And that's been a great relationship, and is in the process of expanding in a number of different ways. And then with Wilshire, we are partnered on a new taxonomy, and really using our existing taxonomy as a jumping off point, but working with a great team of smart people to continue to refine that. And our taxonomy breaks down crypto assets into a number of different use cases. So you want to know what are stable coins, or what are smart contract platforms, or what are NFTs. Well, it really helps you organize the space, similar to the way you use GICs to organize equities into different industries. We've got this taxonomy, and Wilshire and Digital Asset Research are partnered up to evolve that into what we think will be an industry standard. Of a broad set of firms, some competitive even to us, using the same taxonomy, I think will help organize the space in a consistent and rigorous way.
Yeah. Well, and especially for us, managing portfolios beyond Bitcoin and Ethereum and going into, the top 150, our investable universe is Gemini's exchange. And that's only expanding every day, just like other centralized exchanges. And hopefully we'll be able to bridge across centralized exchanges. That's going to come with regulatory, clarity. And hopefully that, I think, one of our beliefs is 2022 is definitely going to be the year of regulation. We see a lot of sideways action. We see some pain this year, with some good things. But when you start talking about developing the standards of the industry, that's where we wanted a partner who was working towards that as well. That wasn't just doing their own siloed thing. There's many partnerships that you guys have that are going to be vital to developing those industry standards, especially from taxonomy segmentation. So that way we're all speaking the same language when we're talking with other firms or other clients, and everyone's going to be able to say, okay, I know what this is. I know what this segment of the crypto markets is, because one of the grossly misnomers of the industry is that Bitcoin is the proxy for digital asset markets. Sure, there's correlations and everything in terms of big macro movements, but largely another thing we see 2022 and beyond is there's going to be this decoupling, right? And you're going to start paying attention to different pairs, right? Like when you start trading in crypto, you start paying less attention actually to USD versus Bitcoin or USD versus Ethereum, and not just USD markets and USD liquidity pools. You start looking at different pairings, right? What's ETH to BTC? What's Solana to ETH? What are the different pairs trading at? So that way you can maybe get a sense of where sentiment is and where activities are. And again, I think I'm digressing a little bit, but I'll stop there. But all this to say that developing these standards is very important. So we couldn't think of a better partner, in terms of our analysis. We've gone to other, market data and research. It's a competitive place right now in the crypto space, market research and data. But when we decided that we were going to go with y'all, and this was the partnership we saw that, hey, developing those standards is really important, and you all have some great partnerships with there. But
we're super excited to add Arbor to the list now. So as we came together to work on this partnership, we were super excited that someone who has that right approach to the market, has the right institutional background, and can speak in a way that really will make sense to a lot of our target clients. And so super excited to add you to the list.
Oh, thank you. Well, so let's segue into this a little bit, because I think we talk like big picture with DAR. Take us a little into the micro, because I know there's 3 levels when you guys do like token analysis. Can you give us a brief high level overview of kind of what analysis of a token would look like?
Yeah, so sometimes has to vary based on the token and its stage in the life cycle and things like that. But typically, when we analyze a token, especially for the purpose of vetting it for suitability and making sure that it's safe and sound, we think about first of all just an overview of the token. What are what's the use case? What's the team behind it? What's the circulating supply? How many of the token are out there for trading? How much are held by insiders? All this sorts of kind of details you would want to think about around a token. We call that section of the analysis kind of the token profile. It's got a bunch of data organized in a disciplined way so that you can kind of compare one token to the next and see a number of different things about its technology and some of the metrics that surround that token.
Yeah. And let's pause there for a second, right? That's really important. So if you're listening to this, a lot of times you're going to think, okay, like I know Bitcoin, I understand Bitcoin, right? Or maybe you have that understanding of Ethereum. And then you go and see another token you want to analyze. And then you go and compare those. You're not always comparing apples to apples. And it's really important to understand that first segment is really important, because you can't compare Bitcoin to storage, right? You can't compare Bitcoin to a Web3 application, right? You want to make sure you're getting that right comparison. So having that first segment of that token profile is really important. So that way you make sure that you're doing the proper analysis. Again, speaking to that quality and cleanliness, So just wanted to highlight there because Bitcoin is not everything else. Bitcoin is very different, has its own use cases, all that stuff. And you don't want to sit there and compare something to that. And then, you may discredit a certain token or coin or project because, well, it's not Bitcoin. Well, okay, that's fine. Like it all depends on the investment thesis too. But I think it's important that first profile. So I just wanted to highlight that. Sorry, but I didn't mean to interrupt.
No, thank you. Second pillar to these reports is really around the market and market data. Is it correlated to other assets? Is it correlated to its sector and subsector? Is it trading in sufficient volume? Where is it trading? Those kinds of market data and data about the network itself are, it's important to have a view on that and to have an understanding of it. We see a lot of these assets that do, tend to be highly correlated during macro events, like you mentioned earlier, but tend to be uncorrelated or have their own path during kind of normal market cycles, and that's sort of an interesting thing to understand, to get a feeling for what will happen in a negative market environment, negative market event, what will happen during other market events historically, and kind of getting a flavor for that. We want to make sure we're taking that into account. I think there's a lot of we're investing in these, or you're investing in these for some return. You're not investing in these just for fun. So we have to really look through that lens. Equally important in this segment is what's happening in the transactions on chain. And so when we think about pricing,
tell us more about that.
Yeah. So people sort of sometimes get these confused, but when we think about the price of Bitcoin or the price of Ethereum or the price of any of these assets, usually those prices come from a centralized exchange like a Gemini, where you can compare Bitcoin to US dollars. You can get the price. What's one Bitcoin worth? When you go on chain, there are, on the blockchain, there are transactions happening. Those are typically not transactions where we're trading one asset for the other. There are transactions that are passing that asset around from one owner to another owner. So that's a different type of data. It's not price. It won't give you what the current price of Bitcoin is, but it will tell you for a network for one of these assets, what volume of users there are that are using it, how many unique wallets are out there, for example, how concentrated the transactions through those wallets are. So how often are two wallets interacting with each other? How often are the wallets or how long are they holding the asset for before it moves on? Is this really happening because insiders are transacting amongst themselves, or is it really a diverse group of people or a diverse group of wallets who appear to be unconnected? And then we can say, well, this is probably a decentralized network, and it's probably less susceptible to some of those insider threats that you might have if it were just a group of insiders trading the asset over and over and trying to create volume or the sense of volume. So I think that we call it measures of decentralization. That can be really helpful in understanding whether this is a network that's robust and likely to last because it's got a good group of users who find value in it, or is this something that is not quite there yet? And this becomes super important when you think about the application of securities law in the U.S. Is this a security or not a security? And that decentralized nature is one part of the testing that goes on to reach a conclusion there.
Yeah. Oh my gosh. So couple points there. I think maybe might behoove us to go deeper in on what you just mentioned. So the first being this idea of network effects, right? A lot of these are network effects businesses, quote unquote, right? Like they are determined by the user base, the developer base. Are people using it? Are developers coming onto it and building on top of it consistently and at at a good growth rate, right? But then again, this idea of cleanliness and quality comes in, right? One thing that we've learned that maybe that we got wrong before previously with these types of network effects businesses, Facebook, Google, any of these tech companies, which is they were super volatile, after tech bubble, during tech bubble, is you don't want manufactured user growth, right? And you need to understand, is the user growth manufactured? Is it real? Because again, you're going to see a lot of people slinging data saying there's this many wallets, there's this many users on this protocol. Look at how much it's grown, when it could just be a Chinese or an Asian or whatever international. It doesn't have to be China. I'm sorry, I didn't mean to use those specific countries, but anywhere, right? Where it's just bots, or if there's AI just making wallets, trying to show, because again, a lot of these are VC backed, right? So they need to show some thresholds and some metrics that they're growing. And so it's really important to get the clear picture of this. And again, one of the highest value adds that we see with DAR is definitely this piece of it. So the network effects is really important. So understanding the true network effects that are happening on these protocols. That's the first thing. The second thing that I think you hit on with those things is risk analysis, right? So first and foremost, if you're developing portfolios for clients, we start with the risk analysis. That's the first thing you do, right? And so you have to really go in, and these types of, this type of on-chain data really, in this cleanliness and quality, really helps have quality risk analysis, right? And you can actually say, what really those risks that are inherent to those types of protocols and to those specific protocols themselves too. So if you're listening, those are two of the main reasons that we wanted to make a partnership with a firm like Digital Asset Research, and something we look into ourselves. But obviously we're only as many people, and we have so many other things too as a team, where we needed that type of resource. So just thought those 2 points are really important, especially on the segments you're talking about. So, but continue on. Tell us a little bit more about the research process.
Yeah. So the sort of final pillar of the reports that we put together is an analysis, and this analysis takes a slightly different approach than maybe traditional research would, where you have a lot of times some research analyst will put together some piece of text, and you have this long report to read and go through and really try to discern what is he or she saying, and what conclusion should I draw from that. We've put a framework around a number of these metrics and some ratios and some ways of looking at exactly those kinds of issues that you just talked about that are super important. What's the developer community doing, and what's the code base look like, and is it being updated and refreshed, and does it meet standards, and what standards does it meet, and what is going on the network, on some ratios around some of these network effects. And I love the phrase that comes out of political speak, where political campaign managers will talk about AstroTurf, which is grassroots efforts that have been manufactured by some political insider and aren't really grassroots. And so we sort of look for the same thing here. Can we find evidence that this is a manufactured, the bots like you talk about, or other ways? And we look at the regulatory environment, and we look at a whole host of other aspects of this asset. We do write a little bit of prose around each of the sections, but we draw a conclusion based on the case that we're looking at here. Is this appropriate for an early venture stage investment, or is this appropriate for a liquid passive product, or is this appropriate for a custodian to hold? And draw on 5 years of experience and this framework for looking at both a number of ratios as well as some facts and reference points that we can draw as to what are safe methods of cryptography for example, for custody, and what are riskier methods of cryptography, and will it fit into the institutional quality vendors that are out there in the space, or will you be forced to roll your own and do something that is going to be much riskier? This sort of approach gives us, we think, an analysis that is maybe got some benchmarks that we can look at then across assets, compare one asset to the next, and really kind of understand, is this asset going to be relatively as safe as a Bitcoin, or relatively as safe as an Ethereum, or does it have some things that we need to really, point out and understand as additional risk factors, and that analysis can help you understand what you're getting into. Now, we're not going to make an investment recommendation. We don't do the buy, sell, hold types of analysis or recommendations, but we do think that it gives you a way to kind of, on a relative basis, see how this asset might compare to others, and maybe use the tool in a similar way you might with a fixed income rating, and say, look, I'm looking for something that's relatively safer, and so I'm going to go to that AAA, or I'm willing to take some risks, and I think there's opportunities in junk bonds, so I'm going to go down the rating scale, and to look at these kind of in a relative way, and make decisions about how you allocate your risk.
Yeah, and ratings are really important, right? Especially when you're talking about institutional adoption, any adoption really. Ratings are going to be a big piece of that. So again, one of the things that we love about the analysis that we saw in some of the examples was that while you don't give ratings, we can at least start to develop what because what do ratings really entail? You can at least make up the components of what normal ratings do entail, and at least show that to regulators. Should they come knocking on our door. That's kind of the goal for us is, there's no ratings, but we've kind of created our own ratings. And it's where you're not just getting it from us. We have partners like Digital Asset Research, we have Masari, we have all these other, market data feeds to show that due diligence, which for anybody listening, if you're deciding whether or not you should, go into this and, manage your own fund or, do your own advising on these assets, there's a lot of work. Right. And part of that, and that's where I guess I digress a little bit, but kind of wanted to speak to a little bit. One of the things, especially in that last section, that really helps us determine is because, we're trying to determine too, when we're analyzing a token to put in our portfolio, it's really this idea of defensibility and anti-fragility, right? So we have to have some sort of metrics and thresholds, and the research y'all are providing is definitely helping us make that stronger when we go present this. And, who knows, maybe we're going to be the ones, that help with the new rating systems that come out for crypto assets. But I think this is a good segue. I appreciate you diving in, but anything else you'd add there? Does that kind of speak to what you guys do for other clients as well? Or what else would you add?
Yeah, it does. And I would tell you that 99% of our client base are regulated entities, and most of them highly regulated. And having some diligence and knowing that you've taken the right amount of care around asset selection, whether it's for something you're supporting as a service provider or something that you are holding for your clients or investing for your clients or what have you, I think that's it's really the place where we can add the most value in terms of the types of clients and what we do. And so I think you captured it very well.
Yeah, I think it's just a different conversation, right? So let's say you have a firm that's focusing on digital assets or crypto assets. A year from now, regulatory bodies are, getting caught up, and now like, okay, we're going to start doing deep dives into the companies that we've allowed to operate over the last couple of years, but we really haven't been overseeing them. Now we got to go analyze, what have they been doing? Have they been doing their due diligence? Did they do their, protection? Especially for us, we're an RA, registered investment advisory firm. Through Arbor Capital, we're SEC registered. We have to show these things, and they're going to audit our process. We know, we just assume they're going to come in and audit our processes at some point. And so it's a different conversation to when, if they come in and say, what's your due diligence process? And we show them, it's a different conversation when we say, hey, we've got this partner here, not only us, here's our robust, and ours are robust. And for those of you listening, we are going to record a series where we kind of dive into our due diligence process. But anyway, that's for a future conversation. But
when you say you have a partner like Digital Asset Research who has their partners and how long they've been doing this, FTSE Russell, Wilshire, Bloomberg, and then all the work you've currently done, you not just only have your work to fall back on, you have your partners, right? And that's a different conversation to where if you just went with CryptoQuant or Chainalysis, these new crypto native firms who maybe haven't had that trust and built, over the last 30, 40 years that these other companies have in terms of, rating investments, developing standards in the industry. So purpose of me going through this is if you're listening, it's important to have those types of partners if you are a regulated entity like we are at Arbor. So just highlighting some of the benefits of partnering with Digital Asset Research. And I kind of maybe shouldn't. I feel like I'm giving away a secret here to where other firms are going to come, but I think that's only gonna raise the industry, honestly. So I hope everyone listens and then goes on here. But let's do this to end off, because I think you guys have done a lot of great work in the past. Currently, are still doing a lot of phenomenal work. Take us through a little bit. What does the future look like? I know there's technology is evolving every day within the crypto space, right? So there's new products, new ways of looking at things. So tease us a little bit, Doug. What are you guys working on now for the future?
Well, lots of things, because crypto is constantly changing, as you pointed out, and so we're having to get into all sorts of things we never would have expected to, even just 2 or 3 years ago. Constant innovation is happening in crypto, which is one of the reasons it's exciting to be in crypto. You get to see new stuff all the time. But our big effort right now, and where we think there'll be a huge amount of value add for our clients, is around yield. And so there's a lot of ways to generate yield in crypto. And some of them are ways that we generate yield in traditional finance. So token lending, which is sort of like stock borrow or stock lending. You get to let somebody else use your asset for a time period, and then you get some return from that, some yield from that. Mm-hmm. But there's also governance that happens in proof of stake networks, for example, where yield can come from governance events or can come from confirming transactions. Yep. We also have DeFi protocols that generate yield on their own. Through a number of different mechanisms, things like the automated market makers in decentralized exchanges. I can go on with a number of other categories. What we're trying to do is bring some clarity to that, so that yield data can be available for analysis, for investors to consume and do things with, that like you would do in a fixed income market. Historically, as you think about how do you construct a portfolio, how do you go find the yield that is most available, and how do you risk weight that yield so that you know what the risks are in taking that particular yield or exposing yourself to that particular yield. And then we think that there's huge opportunities for investors to think about this market in a different way, where I think for a lot of investors, they've had this narrative that Bitcoin is a store of value, it's the digital gold. And sometimes that's hard to think about how you get something out of that unless you're a true believer in Bitcoin and you want to own that for forever. Similar, there's a lot of true believers in gold, and they are attracted to that asset, and they think that there's a specialness there. I think that's been a struggle for a lot of people, but when they see yield and they see the opportunity to generate yield in sometimes in some fantastic quantities in crypto, then it all of a sudden light bulbs, and we've seen a lot of light bulbs go off from people who didn't really get the reason why crypto could be interesting to them, and in the last couple of years they see it and they are excited about it. So we want to come out with some yield indices that kind of benchmark the yield space on different use cases, and some screeners and some risk tools, and we think that yield data will be super interesting.
We couldn't agree more on that. I'm really happy actually you mentioned yield, because that's definitely one of the things we're excited about Arbor. And again, when you're looking at the options, right, for investment, if you're a retail investor, an institutional investor, you don't just want to pick, I guess, the partners who have currently, some good services or solutions. You want to look at who's going to be at the forefront too of what is coming with crypto assets, right? And that's where, yield is going to be the first spot, which is why I think there hasn't been as many, because, when you start introducing yield, right, that's more regulatory risk. There's more attention and oversight on those types of products, which is why you saw things like Coinbase, when they were going to release their yield product, the SEC was like, do it, we're going to sue you, right? That regulation by enforcement that everyone loves. But I actually had, I don't know if you got a chance to listen to the episode I had Leslie Lamb from CoinFlex, and they're over in Hong Kong, and they have a really interesting, and I think they're years ahead, right? And I think phenomenal what they're doing. They're utilizing, AMM tech, with yield and DeFi staking and everything. And you're going beyond just the AMM tech of, operating on a DEX like Uniswap. They're taking that into liquidity pools and going beyond that, and then gamifying it, right? Like, there are so many things coming in the yield space that, because it's not on the headlines, and because all anyone wants to say is that it's going to be regulated out of existence, no one's really paying attention as much. But it is coming. And when that regulation does happen, those products and those services and those solutions that are being developed are going to be nimble enough to adjust, and they're going to come, and it's going to offer just so many more. So which makes it even more important on the work that y'all are doing, and it looks like you guys are focusing on, is those benchmarking, those standards, right, when it comes to yield services or solutions. So again, for us, as long-term believers in not just Bitcoin and the assets themselves, but in the networks and the technology this is bringing to bear for the next iteration of our financial system, you need a partner who's going to be able to do all that work. And yield, it's coming, and we're excited for it. And we're going to be in a position now. I feel like we're in a better position now with partners such as yourself to be able to, offer safety, security, comfort for advisors who do end up wanting to get into these. And that's really what we're here to provide. It's not just an investment portfolio. We want you to, be able to sleep at night, that your firm's not taking a huge, leap into something that you don't truly understand yet, but you have a team helping, and then we have a team behind our team, and then we have other partners behind those teams. It's kind of how it goes. But thank you for sharing. So I guess let's end off here, because you're coming in the beginning of 2022. This is kind of one of our first episodes. Give us a theme that you think is going to play out in crypto markets. And I know it's a big question, and it can be narrowed down to where you guys live and breathe, day in and day out. So, but what do you guys see as a big theme in crypto markets? What's going to be 2022 of digital assets?
Well, I think I'm going to jump on, one of the things you mentioned as a theme that we see, and we see coming in a bigger way. As first, maybe I'll get you two themes here, but one is regulation. The regulators are much more sophisticated than they used to be. A number of the activities we're seeing in the space are easier to draw a line around as regulated types of activities. Yield is a great place where you have to be careful, what you're offering and where you're offering it, and how that's structured. And I think there's been a sense in crypto that regulators should stay away. And I think as these products evolve, the need for regulators to stay away is this is not reality. What is reality, though, is regulation is a problem to be solved, not a problem to sweep under the rug. Mm-hmm. How do you bake regulation and regulatory frameworks and regulatory compliance into crypto trading and custody, all the different pieces of the value chain? And I think we're seeing regulatory frameworks. There's one in Europe that's winding its way through the legislative process. Seems likely to become law next year. We've seen Gensler at the SEC kind of pound the table for, we want more authority to regulate what's been lightly regulated or unregulated activities. And a number of people in Congress who have been, very vocal about the need to regulate certain segments of crypto, if not all of it. And it's very possible that we'll see an evolution in the U.S. of the regulatory environment in a way that brings clarity. It may not be viewed as positive by everyone, but it'll bring clarity and then allow more and more actors to get into the space. Of course, there's a lot of people kind of sitting, waiting for the SEC to approve an ETF. That would be sort of a regulatory thing that could happen next year. Certainly doesn't seem like it's going to happen this year, but we did get the futures-based Bitcoin ETFs approved, and so taking a step closer. And the SEC seems to be more comfortable than it used to be, and so perhaps next year we'll see those types of positive regulatory evolutions as well. The other sort of theme that I would point out that we have been, we think is very interesting is the opportunity for DeFi to replace a lot of value in traditional financial services. And some of those building blocks of DeFi are building blocks that could be used by a lot of centralized actors.
Yep.
And so we think there's a future of finance where, just like an internet company, a web delivery company in the mid 90s would build its own web server and write all the code for that web server and maybe build its own CRM, and then you fast forward a few years and you've got the LAMP stack, the Linux and Apache, and the different pieces that made putting up a website something you could do in an afternoon. And then you just needed a little bit of your own content, and you could have your own website up, and you could be delivering e-commerce or a host of things. And I think we see that traditional institutions will be able to use these DeFi primitives or these DeFi pieces and put together systems that track risk, that do trading, that do the sorts of things that they would have built really bespoke, custom internal code to do historically. Well, that gives you tremendous leverage to use something that's highly tested, that's highly scrutinized, that is cheap to use, and so we think that there's probably an analyst or an engineer at Bank of America who's going to pull together some DeFi primitives and create the next financial product that they sell to their customers. And that that's not going to happen next year, but next year is a year where a lot of those building blocks will continue to be sort of put together. So I'd give you those two themes as two that we're watching very carefully and super excited about. I won't even pick up NFTs or all sorts of other. We could spend the next 6 hours, and I don't think we would exhaust the potential.
Well, we definitely agree there, and yeah. Well, thank you for sharing. If you're listening, you're going to hear some similarities between not just us, but a lot of many other, I want to say, deep minds or people who have taken the deep dive into crypto markets and traditional and understand the blending of the two. You're going to hear very similar themes that they think. So thank you for sharing. Well, listen, it's been so fun to jam with you. Again, like you said, we could spend 6 more hours talking about even more. We're definitely going to have you back maybe again this year to see if what we're seeing is happening and maybe get an update. But until then, tell us where people can find you. Where can they find maybe you, Doug, as well as Digital Asset Research? Give the audience those things.
Yeah, so I am on LinkedIn and happy to connect with people there. I also would tell people that we've got a great newsletter that we do every day. And so if you want to go to our website, digitalassetresearch.com, you can sign up for a free daily newsletter that is the top news of the day from an institutional investor perspective. So top 5 stories and kind of give you a daily digest, lets you keep on top of what's current and interesting in crypto. And then a weekly market recap if you want to see some more of the, or a more markets driven kind of view quantitative view of what's happening in crypto markets. That can be a great weekly recap to get. And then on a monthly basis, we do a regulatory recap. And so if you want to keep up on what the regulators are doing in crypto, that can be a great way to keep yourself abreast.
Wonderful. Well, I hope everyone, this lights a fire for you to go out, schedule some time with Doug and the firm. I think you'll enjoy the conversation on top of the level of discipline and work that they do. I know we do. We're excited about this partnership for 2022 and beyond. Until next time, everybody, stay safe, be happy and healthy, and make sure to tell somebody you care about them. See you next time.
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.